For October, I wanted to introduce a new segment. We're going to call this one Opposite View, where we take a view or a question that I see in the marketplace or from clients, and I turn the premise on its head, and we look at things from the opposite lens. Now, I think this is important because you always want to look at all issues from multiple angles so you can get as close to the truth as you can. So there's been a lot of questions, and there was even some fairly famous investment banks that published some pretty negative research pieces here over the course of the month. So what I wanted to do, as opposed to focusing on the downside risks, what I wanted to talk about were the potential upside risks that are out there. This is important to recognize because despite all of the worries that are out there, most of the time the stock market goes up. So what could possibly drive that? Well, let's talk about one major driver, and that is AI spend. Now, based on some work from Dan Ives at Wedbush Securities, he estimates that for every $1 spent on graphics processing units, or GPUs, those are the big chips made by NVIDIA, AMD, and others that power AI, you see $10 of downstream spending from that. And now that may not seem impressive on the surface until you realize that there's approximately $1 trillion of capital expenditure needed in order to renovate existing data centers in the United States, let alone build new ones. And based on the spend to date, we're only about 15% way through the process. So if we see continued high AI spending or accelerating AI spending as companies begin to realize the benefits of it, which we're starting to see even now this earnings season, then this could provide a significant economic tailwind that no one's counting on. And it would be very, very significant, just given the size of the spend that's available. In addition, the productivity gain that you'd see accrete to the US economy would also help drive the economy forward, which could overwhelm the headwinds that we're facing just because we have a more powerful tailwind. So we don't want to be immune to the downside risks or ignore them, but we also want to look at risk as well in terms of what can go right and what are the upside risks that perhaps investors aren't fully appreciating and how they could be surprised to the upside.